You ever get that feeling deep in your gut, that nagging thought that you're the only one missing out on the next big thing? Well, in the world of trading, and especially with crypto, that feeling is real, it has a name, and honestly, it can be your absolute worst enemy. So let's get into it. Let's figure out how to turn that knee-jerk impulse into some real, powerful insight.
You know how it goes. You hear this from a friend, you see it all over your social media feed, and boom, the pressure is on. Just one question like that can hit you with a wave of anxiety, right? It makes you feel like you have to do something right now or you're going to be left in the dust forever.
And that feeling, that pressure, that anxiety, that is exactly how you fall into what's called the FOMO trap. It's this mental pitfall that taps into our most basic human instincts. But believe me, in the trading world, it can be totally devastating.
So what exactly is FOMO? Well, at its core, it's making an irrational decision that's based on unverified information. I want you to really hear those two words, irrational and unverified. This means you're not trading with a plan, you're not using your head, you're just reacting to all the noise and emotion flying around. And this kind of emotional reaction leads to the #1 mistake in all of trading. You see a price just shooting for the moon, so you panic and buy way up near the top. And then, when all the hype dies down and the price starts to tank, you panic again and sell at the bottom. You literally end up buying high and selling low, locking in a loss almost every time.
But here's what's so important to understand. The damage isn't just about the money. It goes so much deeper. This whole cycle of stress and loss can start to bleed into your actual life, leading to some really serious mental health issues. We're talking anxiety, depression. It can even push away your family and friends. That is a massive price to pay for just chasing a trend.
Okay, but here is the good news. You are not powerless here. You can absolutely escape the trap. You just have to make a shift from a mindset of fear to one of logic and control. And the very first step is just mastering what's going on inside your own head.
So how do we actually do that? Well, first, you got to take the time to do your own research. Don't just believe the hype. Go and verify it for yourself. Second, rely on trusted outlets, not just some random person you saw on social media. Find sources that give you clarity, not just more noise. And third, and listen, this one is the most important of all. You have to develop a guiding strategy, a plan, a checklist, something that can be your shield against making those rash emotional calls.
And a huge part of having a solid strategy is just accepting a simple truth. You can't win every single time. It's impossible. Nobody does. Once you really embrace that reality, you can handle the occasional loss without totally spiraling out. And that, in turn, is what sets you up for more consistent wins down the road.
All right, so you've managed to quiet the outside noise, and you've got a strategy in place. Now what? Well, now you need data instead of drama. You need to actually learn the language of the market itself. And one of the best, most fundamental ways to do that is by understanding these little things right here called candlesticks.
Now I know, at first glance, this might look a little complicated, but it's actually incredibly simple and really powerful. Just look at the main part, that thick block we call the body. That shows you where the price opened and where it closed for a certain time period. And those thin lines sticking out, those are the wicks, and they show you the absolute highest and lowest prices it hit. The color tells you the rest of the story in a second. Green means the price went up, red means it went down. Simple as that.
Seriously, don't let the charts scare you off. A great way to think about it is that each candlestick is like a single heartbeat of the market. Every single one tells a tiny story. And when you string them all together, you get to see the whole epic saga, the constant battle between buyers and sellers playing out over time. Okay, so once you can read one single candle, you can start to see words, and then even sentences begin to form. These are what we call candlestick patterns, and they are basically powerful signals that can give you clues about what the market might be about to do next. First up, let's talk about the bullish patterns. Just think of a bull thrusting its horns up in the air. These patterns are telling you that the buyers are gaining strength and the price could be getting ready for an upward run.
A real classic example is this one, the hammer. You'll usually spot this after a price has been falling for a while. Now look closely at that long lower wick. It's telling you a story. It's saying that the sellers tried to push the price way down, but then, bam, the buyers stormed back in with a ton of force and hammered the price all the way back up before the session closed. It's a visual sign of a really strong defense by the buyers.
Here's another really powerful one, the bullish engulfing pattern. What you're seeing here is a small red candle, which represents a losing period for buyers,
being completely swallowed up or engulfed by a much bigger green candle. It's a really dramatic visual that shows a huge shift in momentum where the buyers have just completely taken over from the sellers.
But of course, we all know the market goes both ways, so you also have bearish patterns. And they're the total opposite. Just think of a bear swiping its paws downwards. These patterns suggest that now the sellers are taking control and the price might be heading for a slide.
Now, check this out. This is the hanging man. It looks almost exactly like the hammer we just saw, right? But its meaning is the complete opposite, all because of where you find it, at the peak of an uptrend. Now that long lower wick tells a very different story. It suggests that even though the price is high, a big sell-off happened during the period, and the buyers just barely managed to fight it back. It's like a big red warning flag that the buyers are running out of gas.
And, just like you'd guess, there's the bearish engulfing pattern. It's the perfect mirror image of its bullish cousin. You've got a small green up candle that gets completely swallowed by a massive red down candle. This is a huge signal that the momentum is flipped and the sellers are now firmly in charge.
So here's the most important takeaway from all of this. Neither of these pieces really works on its own. A calm, strategic mindset is what keeps you from making impulsive, fear-based moves. And learning these patterns gives you actual market data to look at, instead of just listening to hype from some friend. It's the two of them, together, that transform you from a gambler who's just reacting to fear into a trader who's acting with real insight.
So now you have the basic tools. You know how to understand your own psychology, and you know the basic language of the market. You've seen how to fight back against fear with a plan, and you've seen how to actually read the stories that the charts are telling you. So the only real question left is, are you ready to use them?